This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 9th, 2015. Euro dollar. So a nice little bounce in the euro out from the recent weekly lows, which came in at 109.16, with the market trading back above 110 and towards 111. But anyway, despite the bounce, the market still remains pressured to the downside, with the focus on a retest of the 108.19 low from late May. At this point, only a break back above last Monday's high, which comes in at 112.79, would compromise the immediate bearish outlook. Sterling dollar. So cable setbacks have intensified after the market took out some previous resistance, turned support in the 155.50 area, and the market is now focused on breaking further down towards that critical low that we saw going back to the 1st of June, which comes in at 51.70. At this point, we need to see a close back above 55.50 to put the pressure back on the top side for a potential retest of that 2015 peak at 59.30. Dollar yen. So dollar yen has accelerated to the downside, with the market taking out critical support in the 122 area and now focused on a test of next key psychological barriers at 120 further down. But at this point, given the latest intense breakdown, we can't rule out the possibility for deeper setbacks below 120 now to extend down towards the 118s, with looking back to lows that we saw from earlier this year in March. At this point, the market would need to break back above 122 to put the pressure back on the top side and suggest a potential higher low in place and resumption of gains back towards that multi-year high that was set going back to the 5th of June at 125.85. Euro Swiss. So Euro Swiss has mostly been consolidating over the past several weeks, though the market looks like it's in recovery mode and could be in the process of putting in some form of a medium-term low ahead of the next major upside extension back towards the February peak at 108.15. But a break above the high that we saw going back to the 4th of June at 105.75 will be required to open the door for an acceleration of gains. In the interim, setbacks should be very well supported ahead of 103, while ultimately only back below 102.35 would negate the current structure. Aussie dollar. So Aussie continues to extend declines to fresh multi-year lows following that break that we saw a few days back below the previous support, that previous 2015 and multi-year low at 75.33. Right now, the focus is on an eventual move down towards the key psychological barrier at 70, and any rally should be very well capped now back towards that previous support at 75.33. In the interim, ultimately, the structure remains quite bearish, with only a break back above 78.49 to compromise that bearish outlook. Dollar CAD. So dollar CAD remains pressured to the top side, with the market continuing to accelerate and now closing in on a retest of the 2015 high going back to March 18th at 128.35. Once the market takes out this level, it opens the door for fresh upside towards the 2009 peak further up at 130.65. Right now, any setback should be very well supported into the 125 area. Kiwi dollar. So finally, we saw some Kiwi relief on Wednesday, with the market correcting higher after breaking down to its own fresh multi-year lows at 66.20. At this point, there is risk for additional corrective price action, though ultimately the downtrend remains intensely and firmly intact and favors additional weakness below 66.20 down towards psychological barriers at 65. Really, only back above 69.24 would take the immediate pressure off the downside. SPX 500. So the S&P 500 continues to now be very well offered into rallies, and the market is now looking to take out critical support in the form of that March low at 2040. A break and close below 2040 will confirm the formation of a longer-term top or a medium-term top and open the door for an acceleration of declines below 2000 and towards the 1900 area. But inability to close below 2040 would suggest that the market isn't ready to roll over just yet and could be poised for another push to the top side, at least back towards the 2100 area. Gold. So gold remains pressured to the downside now after the market took out some key support in the 1170 area and is now focused on a retest of the 2015 low going back to the 17th of March at 1143. A break below 1143 would then expose a direct retest of the 2014 base just a little bit below there at 1131. At this point, we would need to see a break back above the high from the 6th of July, which comes in at 1175, to take the immediate pressure off the downside.